The yuan's depreciation continues down. This article is from South China Morning Post. China's yuan is around 6.9% weaker against the US dollar than it was a year ago, sparking growing capital outflow. Fears amid a weakening economy, but the medium to long-term future of the currency will be supported by solid underlying fundamentals, said a newspaper affiliated with the central bank. Beijing has attempted to strike a positive note for the fast depreciated yuan, claiming it is as a result of short-term pressure, adding that the Chinese currency has solid support from economic fundamentals. The offshore rate has plunged to a 9-month low of 7.34% against the US dollar, while its onshore counterpart also dropped to its lowest level since November at 7.29%. The depreciation has sparked growing capital outflow fears, and as China's economic recovery gradually loses steam, market worries have risen over the country's growth prospect, which further dimmed after July's disappointing economic data. Quote, the Chinese yuan will continue to maintain a fundamentally stable position and around reasonable and a balanced level. End of quote. Financial News. Another quote. Quote, the recent weakening of the Chinese yuan against the dollar is primarily due to the short-term pressure, according to an article published on Wednesday by the Financial News, a newspaper affiliated with the People's Bank of China, the PBOC. So let's get more information, guys, moving forward from videos and clips with boots on the ground. Editors, roll clip, fair use.
The yuan is on the verge of falling to its weakest level since 2007. The People's Bank of China stepped in to inject the largest amount of short-term cash since February. But is it enough? Here with more on this is Yahoo Finance reporter Inez Ferret. Inez, what are you watching?
Yeah, Rochelle, well, China is trying to build up investor confidence, and the People's Bank of China is trying to keep its currency stable, but also lowering borrowing costs in order to boost its economy. Now, just this week, the PBOC cut policy rates, key policy rates. It also injected the biggest amount of short-term cash since February into its financial system, lowering borrowing costs. And at the same time, keeping a currency stable, well, all of that is very difficult because if you have a weak yuan, overseas investors won't want to be inclined to invest. And at the same time, Chinese companies will not want to convert US dollars into yuan because they're seeing their currency being devalued. Now, often it's important to point out that when the Federal Reserve in the US raises its rates, the rest of the world often follows suit because it's forced to in order to protect their currency, because as the US dollar goes up, foreign currencies go down. So in this case, while some other countries have been maintaining high rates, China has been lowering its borrowing rate, and that is impacting its currency. Now, the PBOC also warned traders, by the way, recently not to keep gambling, saying the foreign exchange market is a big deal and maintaining stability is their first priority. Rochelle.
Quoting sources showed Chinese officials ordered state-owned banks to intervene more in the currency market this week to curb yuan volatility. The Bloomberg sources also said that senior Chinese authorities are contemplating reducing banks' foreign exchange reserve requirements to slow currency depreciation. The request for intervention came on the heels of the yuan plummeting to around 7.35 per dollar, a level senior leadership has been watching closely. The sources, who sought anonymity because they were not authorized to discuss the topic, said authorities were also investigating whether domestic firms accelerated yuan falls by trading against it. Even after Beijing's surprise interest rate drop, stronger than expected yuan daily reference rates, and huge injections of short-term liquidity to the financial system, China's markets are gloomy this week.
To see an orderly decline, too, because their export is imploding. Export drop like 15, 16, 70%. That's a huge cliff drop. So you cannot have a strong currency, but they are concerned that they have a climatic decline that actually destabilize the economy. People could be getting very angry if you have a dollar. If you have to convert your currency to dollar if you go to travel abroad and things like that. People get very, very angry. So I think they're just trying to manage the decline, but I cannot see the Chinese currency won't go down. It will go down.
Yeah. How far do you think it might go?
I don't know, 758 is all possible because that's really depend on whether the Chinese government can come up with very forceful, large scale, decisive policy reaction to what is going on. So far, they are reluctant. They continue to refuse to take very dramatic actions. That worries me.
Mm. So we're still talking about the world's second biggest economy here. Still lots going on over there. Is China investable? How should investors be looking at China today?
There are definitely an extra layer of risk premium for the Chinese stocks. The reason for that is, of course, when you have an economy that is going down, when you have the economy going down, that's going to shave your earnings. Usually, stocks are not going to do well. It's going to go down. But for China, there is an extra layer of premium. What is it? What is a geopolitical risk premium? You got this China-U.S. I wouldn't call that confrontation, but it's the geopolitical strife between the two countries is going to get worse, and then there are a whole bunch of restrictions on the inbound or outbound investment bilaterally. You don't know what will come up next. Who knows? I mean, I don't know. The Biden just put a bunch of new restrictions, and China will probably retaliate. So there is extra layer of risk premium here. So I don't think, I don't know how to evaluate the Chinese assets at this point, because it is not a pure commercial and business or economic parameters you have to put into the equation. You have to involve a whole bunch of non-economic, non-commercial factor into it. I don't know how to quantify that. That's why myself, why do I bother? That's my attitude.
Yeah.
Why bother?
Very interesting. Well, thank you very much for joining us today, Chun. It's been great to see you here.
Hey guys, it's Jose, your regular Joe Blow again, keeping an eye out and my ears open to the situation in China not being talked about in mainstream news about China's #1 currency, the yuan. It looks like it's going down and depreciating by the second as short-term pressure continues to rear its ugly head. Guys, as always, do your own research, get the facts, and move accordingly. That's the game for now. Stay in dollars and invest in appreciating assets that make you money to push against inflation, that make you money to fight against inflation. So we continue to apply ourselves to our finances and goals to scale and anchor as we always continue to grow. Thank you guys for all you do for this channel. Thank you for the support, and also thank you for letting me do my best to bring you my best. Don't forget, guys, always stay free.
It ain't hard to tell. I excel, then prevail.